Craig, thanks for joining us today.
Paul, thanks for having me.
Reverse mortgages. It's a topic, people have heard about reverse mortgages for years. It's a great way for older people to meet some financial needs towards the end of their lives. But there's been challenges with reverse mortgages over the years. And I know there's been some regulatory changes. What does the reverse mortgage market look like today? Is it safer for elders to explore? What's sort of the dynamics today?
So I think you said it very well, Paul. The reverse mortgage product and program changed pretty substantially in 2013, 2014. FHA, which is the insurer of all FHA insured reverse mortgages, made some significant changes to the program, which had a lot of impacts. Much more responsible program, one that we think is much more financially sustainable, and one that is ultimately better for older adult homeowners. So I'll give you some examples of some of the changes that they've made. And it's probably worthwhile to remember that it's a mortgage, like any other mortgage. It's just one that instead of the consumer paying, the consumer has the ability to receive payments. And that's a big difference between a traditional forward mortgage. But in the past, reverse mortgages did not have underwriting, to give you an example. If you were 62 and you owned a home, you were automatically eligible for a reverse mortgage. FHA's made some changes where you have to be able to demonstrate your ability to meet your home ownership obligations, like any other mortgage. So in that regard, they've made it safer for individuals to take out a reverse mortgage today because there's a greater assurance that they'll be able to age in place, which is one of the important things about a reverse mortgage.
Right, so even though you're getting paid with a reverse mortgage, you still have to pay the taxes, the insurance, is that right?
Just like if you own a home without a mortgage.
Sure. Okay, so that's the requirement you have. Okay.
Absolutely.
Great. So the reverse mortgage today through the FHA, it's called a HECM loan?
It's called a home equity conversion mortgage, better known as a HECM.
Right.
And it's been around since 1989.
Okay.
And it's grown in popularity over the years.
Sure.
But like any product, you always need to sort of fine tune it to make sure that it's adjusting and adapting to the market of today.
Right.
And that's what we've seen. So besides underwriting, which is an important change in the program, people now have the ability to draw money over time. People have the ability to draw money up front. And interestingly, and this is a nuance that not a lot of people understand about a reverse mortgage, people always think about it as a product where you don't make any monthly payments. You can make any payment you want. And that's why when we talk about a reverse mortgage, we often want to let people know, think about it like a line of credit. Credit unions offer line of credit products to their members. And with a line of credit, and this is a compare and contrast, which I think is useful, if you borrow money under a line of credit, you have to start making monthly payments right after that. With a reverse mortgage, when you borrow money, you can make payments or not make payments. And the payments that you make are the payments that you choose to make.
Sure.
You can make a payment of $50, $500, interest only, principal and interest, or if you need not to make a payment for a month or 3 months, or God forbid you're not in a position where you can make a payment for many years, it's your choice.
Right.
And that's the big difference between the two products. One requires monthly payments, the other one requires that you choose how you want to make a payment.
Sure, right. So you think of a traditional mortgage, you think of a 15-year term, a 30-year term. How does it work for a reverse mortgage? Is it the same way?
So there is no term, interestingly enough. The typical reverse mortgage borrower is about 71 years of age, and they're allowed to, as I mentioned before, they receive payments, they can draw from the line of credit, and they can make payments when they want. The loan is due and payable upon the earlier of two events. They pass away, of course, or they move out of the house permanently. Those are the only trigger events.
Sure.
Outside of that, they can have the loan for as long as they live in their house.
Right. So credit unions, we're not-for-profit cooperatives. Really, the heart of everything we do is ensuring members are in a good product.
That's right.
So we do a lot of financial literacy, a lot of financial education. Credit unions are great consumer lenders. I think, though, reverse mortgages, we don't have that many credit unions offering them. So if you're a credit union thinking about this, what does a credit union have to gear up on, ramp up on, to be prepared to offer reverse mortgage product?
So you said something that's really important, Paul, and that is there's still some awareness that needs to go on with the product and program,
Right.
and in particular with the changes that have been made to the product and program to make it a more safer, a more responsible program for older adult homeowners. We think financial education, at the end of the day, is perhaps the most important thing. Older adult homeowners, as you know, have a lot of their wealth tied up in their homes. So it's a very important asset from that perspective, but it's not particularly liquid. You know, their ability to monetize that home equity is often a function of selling the house and downsizing, or perhaps living in a rental accommodation. But that conflicts with most people's desire to age in the house that they're in today.
Sure.
So loan products, or the ability to borrow against that home equity, is a very important consideration for older adult homeowners. And not surprising, we've done a lot of research on this, and the statistics are staggering. Not just how much of their wealth is tied up in their home, but their ability to finance their retirement. And without accessing home equity, it's going to be very challenging for a lot of older adult homeowners. And I think that's part of the important education. One has to consider home equity as they think about how they're going to live from 65 to what might be 20, 30, 40 more years. Then it's a question about what's the right loan product to consider.
Right.
And what we found, and this is really interesting, many older adult homeowners take out HELOCs. They like the flexibility associated with it. They can borrow money, they can repay into the line. Oftentimes there's no prepayment penalties. And we tell credit unions, other institutions that we do business with, and of course, older adult homeowners, think of the reverse mortgage just like a line of credit. It's no different. In fact, it is a line of credit, except you have the ability to choose what payment you want to make each month, if you want to make a payment at all. So it's the education to older adult homeowners. One has to consider home equity if you're thinking about how to finance your retirement. And once you make that decision, now you need to look at loan products. You need to look at HELOCs, because it's a viable product, I suspect, for many people. You need to look at reverse mortgages, reverse line of credit products, because that may also be a very viable product for a lot of older adult homeowners. It's education.
Right.
And when you stack the two products side by side, the reverse mortgage line of credit is a pretty compelling value proposition for consumers.
So you mentioned underwriting. So for a credit union, we're used to doing home equity lines of credit. We know how to do that underwriting and,
That's right.
traditional mortgages. When a credit union's involved in offering reverse mortgages, is it different underwriting skill they need to know? What is the sort of the process from the credit union side?
So it really depends, interestingly enough, on how a credit union chooses to participate in the programs that we offer. And it really ranges. On one hand, it's what I would call the easier way of being involved. Credit unions just take the application and they outsource the processing and underwriting and closing and funding to our organization. So in that scenario, their underwriting requirement is pretty limited. And then you have the other end of the spectrum where credit unions can offer the whole group of services from application right through to closing and funding. And of course, in that regard, they would be doing the underwriting.
Right.
It's very similar to a forward mortgage or a line of credit. You're checking income, you're checking assets. Of course, you're getting an appraisal. If there's existing liens on the house, they need to be considered in the underwriting process. That's what we like about the changes that FHA has made to the reverse mortgage program. It looks and feels like a mortgage program that lenders have been involved with for many, many years. And that's a good thing. It creates more comfort with respect to the reverse mortgage product and program.
Sure. One of the things we do here at the association, we work so closely with our regulators. We have the NCUA, we have the Consumer Financial Protection Bureau, you mentioned the FHA. So regulatory requirements, credit unions are highly, highly regulated. So if I'm a credit union looking at this, am I going to see any additional regulatory scrutiny? If we use a program for your guys, reverse mortgage funding, did you guys go through all the process already with the regulators to ensure when the credit unions are offering this, the regulators come in, this is how we do reverse mortgages, even though it's new to us, we have this behind us through your firm, et cetera. Talk a little bit about the regulatory process.
I will. So, one thing we like to say is a lot of institutions that are in the regular mortgage or forward mortgage business offer Freddie, Fannie, FHA type of products.
Sure.
Reverse mortgages, the ones that we offer, are FHA products.
Right.
So if an institution is in the business of offering forward FHA mortgages, the requirements to be in the business of offering reverse FHA product are nearly identical. Mm-hmm. There's very little difference between the two. So that's good. Most institutions who offer forward mortgage products are familiar with FHA requirements. If you're familiar with FHA requirements, the leap to be able to offer reverse mortgages is not a big leap.
Okay.
So that's a good thing.
Sure. So let's talk about need. So when we look at credit unions, we've seen an uptick in student loans the last 5 years. Credit union student loan growth has been double digits. We've had tremendous auto loan growth over the last 5 years. Things are flattening out a little bit there. When you look at reverse mortgages, what is the expectation a credit union should have in terms of volume? Is this the demographics of the country, the membership? Is there a lot of need now? Where do you see there?
So, really great question. I can maybe answer it two ways. The growth of the product from its beginnings in the late 80s, early 90s has been extraordinary. But like anything, it's had its ups and downs. It peaked in the 08-09 timeframe and has come off a little bit, and I think that was consistent with the housing crisis in general. It goes without saying, when older adult homeowners have less home equity, their ability to take out loan products shrink.
Right.
So with rising home equity the last 3 or 4 years, you're starting to see the mortgage market and the reverse mortgage market grow again. So that's been a positive.
Sure.
As far as expectations, I think a lot of it has to do with what you put into it. So here are the demographic facts. Credit unions have a lot of older adult homeowner members. So you're starting with a good base. Right. You have a lot of individuals who have probably banked with the credit union for many, many years, who are almost certainly going to be a homeowner. As you know, most older adults have homes.
Sure.
Home ownership rate in that category is very, very high. So you're starting with a good demographic from that perspective. You're starting from the perspective of most credit unions are in the business of offering mortgage products. So it's not an unfamiliar type of product in that it's a loan and it's an FHA loan. It just happens to be reverse. So
right.
There's some familiarity, and of course you have a good demographic. Mm-hmm. As far as expectations, what we find is if you have individuals who are dedicated to the program and have the ability to mine the database of members that happen to be with that particular credit union, put flyers out, do the kind of things that let people know that we have an alternative product to the traditional line of credit that most credit unions typically offer. I think what you'll find is that you'll actually end up getting people who will look at the two products and say, I really need to have a conversation with you about this reverse mortgage line of credit, for the very simple reason that it gives me more flexibility in terms of managing my own finances.
Right.
And that's an important conversation for a credit union to have, irrespective of whether they offer the product or not.
Sure.
Our view is that maybe there's some people who take out the forward line of credit product and they should be considering the reverse line of credit product because of the additional flexibility. Our statistics suggest that there are millions of people who are over the age of 62 who have taken out a forward line of credit product to monetize their home equity and don't really understand the reverse mortgage line of credit product. We think if they understood it better, you'd actually start getting people to take out more of that as opposed to the forward line of credit product where they do have to physically make payments every single month.
Right.
So from that perspective, if they saw how much forward line of credit product they're offering and originating, they can get a good sense as to how much reverse product they can do.
Interesting, right. So I imagine in this line of a product, you have a lot of people like me. Mm-hmm. I manage my father's finances.
Sure.
He's elderly, he has challenges, so I handle most of the financial matters for him. I would imagine in this type of business, you're dealing not only with the homeowner, but maybe relatives who have a concern about what their elder parent is getting involved in. What kind of dynamic is that? Do you have to educate those folks as well?
So it's interesting. FHA made a lot of changes over the last 3 or 4 years, and they are positive for the long-term sustainability of the program. The one change FHA has not made has been something that was in place from the beginning, and that is counseling. And it's independent, third-party counseling where the older adult homeowner who's thinking about taking out a reverse mortgage goes through.
Right.
And what we like about it is it's an opportunity for an independent individual to educate that consumer about what is a reverse mortgage. Right. That doesn't replace the criticality of, let's say, a loan officer or someone from the credit union also doing it. But we all know we're dealing with a pretty special people class. We're dealing with individuals who are older, may not be as financially savvy as perhaps you and I, and having that independent education session we think is really important. What's nice about that process is that they tend to bring in other individuals in the family.
Right.
Have you had this conversation with your children, for instance? As you know, family dynamics are very interesting. Some of these older adult homeowners are very proud and they can do this on their own. But the counseling session provides that entrance into making sure individuals who are related are involved. During our application process, we do the same thing. Who's your next of kin? And by the way, it's not just to let them know that mom or dad might be taking out this product. It's also after they've taken out the product, we need the contact information.
Right.
We're now servicing their loan, and in the event we can't get in touch with that borrower for whatever reason, we want to be able to reach out to the son or the daughter.
Sure.
So we're very involved in making sure other relatives are involved.
Right.
Counseling does a little bit of that as well.
Okay. So tell me a little bit about reverse mortgage funding. You guys are based out of New Jersey. You've been around for how many years? Tell me a little bit about your business.
You got it. So we opened up our doors in 2012. But I think that only explains part of our history. The executive team used to work at MetLife from 2008 to 2012, and before that, Bank of New York from the late 90s right up through 2007, 2008. So our experience, the management team's experience goes back 20 plus years. I've personally been in the reverse business since 1998, so one of sort of the early...
so you've seen a lot of the changes.
I've seen an awful lot of the changes, Paul. Some good and some not so good, but we like the direction that the business is going. What we did when MetLife decided to get out of all banking business in 2012, all of us got together and said, what do we want to do? And it took about a half a second to realize we want to be in the reverse mortgage business. The question for us was how? And we literally built it from scratch.
Right.
We literally put our money back on the table and started building out the technology, the infrastructure, bringing a lot of the people that had worked with us in the past back to reverse mortgage funding. And the growth has been extraordinary. From literally 40 people at the beginning of 2014 to nearly 500 people today.
Wow.
So in 3.5 years, we've grown 10 times. Wow. And it's been pretty exciting.
Fantastic. So for the credit union client, do you do the servicing? What are the services you offer for somebody who wants to contract with you for reverse mortgages?
So very broad spectrum. And I kind of mentioned it a little bit in that some credit union members or credit unions, when they decide to get into the reverse business, almost dip their toe in the water. I think that's probably the easiest way of getting in, where they take the application and they do what I would call a minimal amount of work in order to get compensated. Compensation is obviously very important. And then they outsource processing, underwriting, closing, and funding to us. And then we service that loan for as long as that borrower has that loan outstanding. I'd say that's the way most credit unions get into the space. They want to test it out. They want to see how it goes. What's interesting is that we offer a variety of services where they can progress, where they can go from taking just the application to processing the entire file and submitting it to us for underwriting. That's quite common. To some credit unions that go the whole way. They will underwrite, they will close the loan in their name with their funds, and then sell us the loan, and then we service that loan again for as long as that borrower is remains in the home with that loan.
So the typical credit union, they're not keeping this loan on their balance sheet.
They are not.
They are not. Could they?
They could.
They could.
Absolutely.
Okay.
In fact, it's interesting. Most loans that are originated end up in Ginnie Mae securities, and we are well aware of credit unions that will actually buy those securities, which are collateralized by FHA insured HECMs.
Sure. Interesting.
Yes.
Okay. Great. Okay. Anything else, Craig, we need to know about the business? I think we covered a lot. I think it's a burgeoning area for credit unions. I think you've been in it through 1998, but a lot of our credit unions, I think, are just kind of looking at reverse mortgages. So I think this was a great education. But if there's anything else you want to add, please do so.
Yeah, you know, what I like to tell institutions that are thinking about the reverse mortgage product is give it a relook. There are a lot of views about the reverse mortgage product that go way, way back, and I appreciate some of them. Some are true, and some are perhaps a little bit less grounded in truth.
Right.
But the product has changed fundamentally the last 3 or 4 years. Interestingly, CFPB put out a report in 2012 where they recommended about 6 or 7 changes to the FHA reverse mortgage program, which in 2013, 14, and 15, FHA has implemented nearly every single one of those changes. So it's an example of the government actually doing the work they're supposed to do,
Right.
and the outcome is a much better program. And for us, it's about not just educating credit unions and other institutions about the product of today, it's also about making sure they understand it's not the product they used to think it was. It's truly changed, and the opportunity for it to be a very major product for credit unions and, more importantly, their members is very real.
Right, right. Just curious, technical question. If you don't know that this is fine, but so our credit unions have to report HMDA data, Home Mortgage Disclosure Act data. There's been some changes there. We've been working with the CFPB to help credit unions in certain areas. Is a reverse mortgage? Do you report HMDA data like you do traditional mortgages?
So some aspects of reverse mortgages are HMDA reportable.
Okay.
There's adjustable rate reverse mortgages and there's fixed rate reverse mortgages. And my understanding is that some of those are reportable and some are not reportable.
Okay.
But I don't know
Sure.
which one is and which one is not.
Absolutely. Great. Well, I appreciate you taking the time, Craig. I think this was a great overview.
Thank you for your time.
Thanks a lot. Take
Really
care.
appreciate it.
Thank you.